Hello everyone, welcome to Chill Dill Trades. If you're here for the first time, I'm basically a market that kind of a channel that kind of gives commentary on how the stock market is doing. We look at overall markets as well as specific stocks that look like they have opportunity or places we need to be careful around investing. So for today's video, I'm starting a new thing. This is only my fourth video. So I'm going to be starting something every Sunday. I'll be doing videos on the NASDAQ and the S&P 500 to kind of just give an outlook on how the overall markets are looking, if they're looking healthy or we're getting in kind of dicey range. So before the video gets started, please like and subscribe. If you have found 1 ounce of value from my videos, please like and subscribe. It really motivates me. I've been loving all the comments lately. I really appreciate everyone who comments. I shouted you all out in the last video. If you haven't seen that, go watch that. Everyone who commented, I shouted your name out. Some were fun to pronounce. But so I don't make another 15-minute video, which has been the trend. Let's jump into the charts. So the first thing you want to look at is just the NASDAQ. And so, looking at a 3-year weekly chart, it's been pretty insane over COVID. It's been basically going up. Someone's messaging me about the Logan Paul and a Floyd Mayweather fight. Yeah, we basically see the stock go up crazy since COVID. It's just been this crazy trend line. And the wild thing is every time it breaks, an upward trend line, it just creates another one. Every time it breaks below that, it just creates another one, So there's just been so much buying and so much optimism in the markets right now, which is really crazy, with a lot of fear starting to stir around. And so the first thing I just want to bring attention to is the divergence that's happening on the weekly. And so weekly, kind of how you think about it is if you go, say you look at a daily chart or like an hour chart, a daily chart, and a weekly chart, the longer the time frame, the more influence it has on that stock or index. So basically, like, the longer the term is going to trump the shorter term. So that's why I always start on kind of a weekly long-term basis to understand at a big picture, how is the health of the stock looking? So kind of like I just mentioned, let me find a different viewpoint so I don't block my camera or don't block it with my camera. But what we're seeing is back in September of last year, we actually saw the start of a divergence on RSI. So what divergence means is we see the RSI kind of going lower over time, but we see the stock market going up. And so divergence is when one index or one aspect of something is going down, another's going up. There's a divergence happening. And so we can actually draw a trend line. It's a really, not a large downwards trend line, but we do see a downward trend line on the RSI since September, but we do see an upward trend line in the market. And so this is not a good sign for overall health. The hard thing is when you have divergence on, technically speaking, you don't know how long they're going to last. Sometimes they can last a few months. Sometimes they can last years. And so me mentioning this is not for you to try to short the market right now or try to time the market. It's impossible to do that. But it's just to keep that knowledge in the back of your mind and saying, okay, in a big picture, long time frame, we're starting to see some things become a little worrisome with the NASDAQ. If we also look at the MACD, same story. The MACD kind of, got its highest point back in September, August, and it's been on a downtrend since then. And actually back at this peak, back in the February peak, we saw that we saw the turquoise line go above the white line, which basically means negative momentum. So we are above zero. The MACD's at, I think, a 10-11, but we are seeing a negative momentum. So it's positive overall, but we're starting to see some things change. And I would say that goes equal parts with the divergence we're seeing as well. So those two indicators are starting to give us a little worrisome about the overall health. I'm not talking about, price action in the next couple of weeks. I'm talking about big picture overall health of the markets. Let's go ahead and go to the daily time frame just to kind of see what's happening on a shorter term basis. And so I think it's happening on the weekly too, actually, but I can't even see them on the weekly. But our SMAs, they're healthy. 200-day, 100-day, 50-day. When we see them stack like that, that's showing a lot of health on a negative mark, we are seeing a pretty big gap between the 200-day and the current price action. You can see it kind of comes down every once in a while and tries to get close, but the stock is basically has not been able to break a. My headset keeps dying. Actually, I don't think I need the headset in this video anymore. I just thought I usually have a mic on my headset. I got a new mic, pretty exciting, but I'll keep it on just for the look. But what was I saying? Oh yeah, so the stocks hasn't really broke down below the 100-day very often. The times it does, it just breaks below and it basically shoots right above. And so we're still seeing a pretty big gap, which is, I would say, both a positive and a negative. It's positive that, you know, the price is above those SMAs. It's negative that there's such a large gap between the price and the 200-day. So there's pros and cons there, and that's just something to keep an eye on. On the positives is we're building a lot of support again with trend lines. So we have 1, 2, 3 trend lines now underneath the current price. So the more trend lines you have, you know, underneath the current price, it basically like builds more support. It's showing that the stock tried to break down multiple times and it couldn't, and there's just more buying building up underneath the current price, which kind of gives it more energy to break higher. And we can kind of see this on the candle on Friday last week. Last week we saw this green candle. It's a full green candle. So when you don't see much of a wick on the top and bottom, it just shows that there's a lot of buying and positive sentiment in the stock market. You know, every time we see these big green candles, for the most part, I keep getting messages, we keep seeing, we typically see some upside happening from that. And so with this big green candle, if we can break out of this, looks like it's trying to double top right now. You know, we saw a double bottom back here, which was really bullish. But now we're seeing it kind of come back up, you know, kind of fake out midweek last week about a breakdown. And then just positive sentiment came back in the market when all the numbers came out Friday with jobs and different numbers like that. And so we see it trying to break out here. This is really important. If we break out above this potential double top, there's a high probability we're going to challenge this all-time high again. We'll have to see if it actually breaks above that all-time high when the time comes. But if we break above this, which is really big resistance right now, you can see tons of support in the past. So now it's a ton of resistance in the future. You know, back here too. It's going to be a really big deal now that it's holding this trend line again. And if it breaks above that resistance, that the stock could definitely come higher. Let's zoom out a little bit because we do have kind of an ascending triangle somewhat happening. So we see the degree of growth, or I guess increase on the top side of the candles is still pretty flat, and we kind of see this point coming to. So if we do see, when does this come out? This comes out to mid-July, which is actually my prediction about when we'll see a correction in the market, and I'll get to that video in the next couple weeks. But we do see a kind of ascending triangle forming. So let's see if we have one here too. That's the same trend line. So we're going to need to keep an eye on that, is if we see it come up, you know, maybe hit around all-time high, come back to the trend line. We'll have to see if it bounces in this, and if this ascending trend line, ascending triangle is going to take form or not. So this is a possibility. It's not for sure, but this is definitely something to pay attention to. So next week, see if we break out of this past high that we had, not all-time high, but past high. If we break above that really significant resistance, there's a high probability that we're gonna end up testing the all-time high again, which is, you know, 3 or 4% higher. So that's what I would look out in the short term for the NASDAQ QQQ. Let's go ahead and go to the SPY, S&P 500. Let's first look at the weekly time frame. So weekly time frame, not technically the same story that we've seen in the NASDAQ. So for the S&P 500 SPY, we actually just saw it break into overbought territory recently, which is really interesting on the weekly. So, you know, for the NASDAQ, we actually saw it break back in August, you know, break above, break into overbought territory in RSI. But for the NASDAQ, we're not seeing the same story. Or for the S&P 500, we're not seeing the same story. And when we look at the daily or the weekly chart, RSI is really healthy right now. So kind of what you see, I mentioned this in a past video, I think for Ford, but when you see the RSI kind of stay in this upward movement where it doesn't break above overbought, but it stays, say, between 50 and 70, you typically see it melt up in the stock market. And that's what we've seen basically since last summer, is it just staying in this range, going back and forth, back and forth, back and forth. And so the S&P 500 is looking a lot healthier on the weekly chart. We're not overbought, we're close to overbought, so we're still hovering in that dangerous territory, but it's staying in this range. And so until we see the S&P 500 SPY break below that 55 range on RSI, we're still seeing a lot of positive momentum. When it comes to, actually I'm going to zoom out, the MACD here, we do see a little bit more worrisome on MACD. Let me spread this out so you can see a little bit more. There we go. So we kind of saw, since back in September, October, when we did see the high for the QQQ on the MACD and the RSI, we didn't see the high in the SPY yet. And we do see these lines going close together. This is actually a good sign that they're kind of staying close and moving up. Again, it just melt up in the market. It was happening. But we do see the lines getting close here, and we're going to have to see what happens this next week if the turquoise line breaks out above again and keeps that little gap. We're way above zero, so we're still in really positive momentum, both being above zero and having that turquoise line above the white line. Excuse me. So really positive on the daily charts. There's not a whole lot of negative, honestly, to look at for the short term. Again, like I said, in a couple of weeks, maybe next week, I'll make a video on kind of my long-term perspective on SPY and NASDAQ, but for now, it's looking really healthy. And we look at this weekly candle, this is a really bullish candle. What this candle is telling us, similar to the NASDAQ, but I would say a different form, is basically all the sellers that were selling maybe early in the week all got bought up. So seeing this candle basically end at the top of that range is saying everybody bought up the sellers, and people are really excited or really anxious about buying more, which is a good sign for the stock in the short term. So let's go into the daily just to understand that a little bit more. So kind of similar to, it's actually really similar price action to NASDAQ, where we saw, double bottom, super bullish indicator for the short term. And we saw it come up, kind of fake out, but the S&P 500 actually broke out of all-time highs on Friday. So what's really important here is we're going to need a confirmation that breakout is legit. When you have something breakout for the first day, you need a second day confirmation that breakout is legit, I would say. So we're going to need tomorrow, Monday, a breakout of the stock. Then we're probably going to need a back test to verify that it wants to go higher. And if we see both those things happen next week, then I would say there's a lot more upside happening. There's a lot more upside potential for the S&P 500 in the short term. Like NASDAQ, things are looking really healthy on the daily. We're seeing the SMAs stacked up positively. We see an even bigger gap between the 200-day and the price range, which isn't a good sign. But to kind of counteract that, we do see every time lately that the stock goes down, it tests the 50-day, breaks down below sometimes, but basically pushes right back above. So the stock's been staying above the 50-day, which is bullish, but the gap between the 200-day and the current price is growing, which is not a good sign. When we look at RSI, the RSI on the daily is in a healthy spot for more upside. We're still, we're at 61. We're still a ways away from overbought. So I could see the market pushing higher and kind of getting over into that overbought range in the next couple weeks, just due to these bullish candles lately. We're starting a new trend line here. So we'll have to see if this higher angle kind of survives, I guess is a way to put it. And let's actually put, kind of like I did on the NASDAQ, to see if we're having an ascending triangle. So it looks like we do have another ascending triangle also happening on the SPY. So we'll have to see if the SPY comes up and tries to test the top of that line, and this ascending triangle starts to confirm itself. If so, it looks like similarly, but a little bit earlier actually, to the NASDAQ. We're getting close. But I'm going to end the video there. I already spent 15 minutes. Thanks for watching.